I'm Catherine Ross, and I'm here live from the floor of the NYSE with Jim Cramer. Jim, what's top of mind for you this morning?
Very mild sell-off. I mean, obviously you have to look at the denominator, not just the numerator. And one of the things that I point out, let's just use the stock of Walmart as an example. Walmart was at 115, 16, a couple days ago. It's barely down now. It's higher. And I say to myself, okay, that's not bringing out sellers. That's a good company not bringing out sellers. If we come out tomorrow and we see that there's an outbreak in Germany, maybe an outbreak in the United States, well, then I think you're going to be down again. So what we did was, and we can talk about this in our Action Alert video, we made some trims of what directly is related to South Korea and China. Now, you could say, why didn't you ride those out? Warren Buffett was talking about riding things out. He's not talking about riding out South Korea and China. That's not what he's talking. He even mentioned that Apple is going to get hurt, which is true. And then we want to redeploy into things that are great American companies that are a little more defensive. Now, you could say, well, how did you ever sell in a down 2.5? And I would come back and say, I've made sales in down 2.5 many times, and it's been good. If I did own Walmart, it's down 20 cents. I mean, what an opportunity to lighten up. And because there's no reason for Walmart to go to 120, 123, and we own Costco. And so I guess my bottom line is that this is a very mild opening to what could be a series of outbreaks. I happen to know that area in Italy very well. And I think that this is a public health issue when you have that in Italy, public health in South Korea. And these are going to impact earnings. So I am more sanguine about the death rate because I think the Chinese wouldn't necessarily send people back. I mean, I'd like to think they're not sacrificing their own. I'm sure people who are watching say, oh, no, Jim, they'd sacrifice their own people in a second. I think that there's, to some degree, that's not true. But I come back and I say, be sure that your positions are not directly impacted by China. And if they're not, you can do some buying.
Do you think that the sell-off is justified?
Do I think the sell-off is justified? I have to say yes, because until this weekend, I think there were many people who felt that the decline, that the incidents were going to be on the decline. And it turns out in China, it sounds like they are. But now we've got a whole new group of places, including places that a lot of our stocks, unfortunately, have a lot of business in. I shouldn't say a lot, 3. And those have to be readjusted because you cannot necessarily look through what happens if your companies are closed for a long time. Because you're going to find some people are going to say, you know what, tomorrow they're going to look at the market and say, geez, that stock's only 3-4% from its high. Let me take profits in that. Let's use a neutral stock, Johnson & Johnson. Johnson & Johnson was at 150. I remember for the longest time it was in the 130s. What's happened? Well, it went up a lot because interest rates went down and because the Democrats that are anti the drug companies were receding. Now the Democrats that are anti the drug companies are in ascendance, Bernie. And then you can say, well, he has no chance against Trump. I've read too much to be able to say that. I think there are a lot of very competent people in the business of knowing these things. My friend John Ellis, who has a fantastic newsletter, news items, he has given Bernie a path. Michael Sembolist, who's the best strategist out there, he works at Morgan Stanley, he's given Bernie a path. Well, if you give Bernie a path, then there's a lot of the whole group of stocks you can't own, including United Health, which is was one of our favorites. And I was itching to get back in. I just say, well, wait a second. So if it's directly impacted, and we'll talk about some of those in action looks, if it is shut down, if it does really poorly with low interest rates, those are all things that you need to think. Maybe I should reposition, even if you sold those down 3, reposition that money into things that are much safer and better and more conservative. And that's our plan.
This morning, you penned an early morning Real Money column about the coronavirus fears, and one piece of advice that you gave is it might be too soon to decide to buy or sell.
Yeah, I mean, look, I often think, and this is something that I can't know what my kids do. I can't know what my ex-wife does, but my ex-wife's attitude, this Karen Cramer, she worked with me for years, would be if now when, if it was down a great deal, and if now why, if it wasn't. And I always thought that was good. You know, a stock that's not down a lot, why? A stock that's up, why? A stock that's down a lot, why not? If it has a good story. And I want to talk about one in our Action Alerts video that is a good example of what I'm talking about, and save it for then.
Now, before we head on over to actionalertsplus.com, I do want to talk about our real money stock of the day, which is Gilead, but I want to take it in the larger pharmaceutical sector because I know that our real money experts are going to be weighing in on this all day today.
Right.
So how should...
I recommended it last week in our pages, and I recommended it because I said they have the most likely drug. Now, remember, there's three things you can do. You can have vaccine. We're nowhere near that, but maybe for next season. You can have something that right now, acute care, which is terrific, and then just have containment. And containment is working very well in this country because we have very good people that are involved with containing the CDC. I was with someone who's a scientist this week, and he said something really interesting to me. He goes, I would have thought we would have 100,000 people in the United States now be sick. We're obviously doing something right. Obviously, even in China, they only have 77. No one trusts the China figures, no one. But there's been some pretty good containment. And what Dr. Fauci wants with containment is to slow it down, maybe to get to where it gets to April and it's warmer. There's a lot in the piece, I talk about a lot of the rumors that make it so it's so hard to make a decision, and also make it so what I feel is, you know what, no hurry. I mean, again, to Karen Cramer, I'm sure she's huddled right now with my kids trying to figure, not my daughter in Spain, saying my daughter in Spain could care less about the stock market, saying, look, let's pick some stuff. I'll buy some stuff for you. And I say that because that's precisely what she always did down 3%. She said, find something down 5% on a down 3. But she always had cash. If you don't have cash, it doesn't work. But that's the common sense thing I think she would do. And why do I default to her thinking? Because she was always best in the crisis. I was always best when there was no crisis. She was best in crisis. But then again, we were in 100% cash in the 87 crash. She doesn't think it's like that now.
How should investors be approaching the pharmaceutical sector?
Well, the only thing to worry about in pharmaceuticals is whether they can get the pills. There's so many factories that are in Wuhan that make pills. But I like the pharmaceuticals. I was hoping they'd be down. I mean, I was talking about buying Merck this morning on Squawk on the Street, thinking it would be at 79, but at 82. Then you get into that same thing. Why now? Why now? And why now is so important because the idea that you wake up and say, you know what, today I'm buying a Walmart. Like, why? Like, why? What edge do you have? So we have to be sure that you have an edge. We know the company's doing well. The company does not have a lot of business in South Korea or China, and it is defensive with good yield. And those are all good as long as you get a discount. That does not include the oils because, I feel very strongly that their time has come and gone. The carbon footprint does matter. But I see a lot of stocks. I saw Coca-Cola, and I said, maybe it'll be at 57. Maybe it'll be at 57 because James Quincy's doing such a good job. But it's not. So maybe it'll be there tomorrow.
Now, Jim, the portfolio is making a lot of moves today, and yes. I want to talk about those over on our Action Alerts Plus Daily Rundown show. But before we head on over there, I do have one last question for you, and that is based on the fact that you put this in context where we're seeing the Dow down 730 some odd points at 10:11 a.m. this morning, which is about 2.5%. What's your piece of advice for investors who are seeing this and might be a little bit more worried?
Okay. If you're on margin, be worried. You're still well above where we were when I came back from the Super Bowl and said, I don't want to buy this dip. Okay, so if you're margin, sell. If you are fully invested, trim on this bounce here, 2.5. If you have all cash, look. May not see anything, but look.
All right, Jim, sound advice. Thank you for joining us today. Guys, thanks for tuning in. We are now heading over to our Action Alerts Plus Daily Rundown show over on actionalertsplus.com. I'm Catherine Ross, and we'll see you tomorrow.